Letters from HMRC are landing on doormats across this country addressed to people who have never paid a penny of income tax in their retirement.
Not because they have done anything wrong, because of a gap of just £22.
But there is one ordinary high street account where HMRC cannot touch a single penny of what your money earns.
One account. HMRC can never touch it, and your savings are probably not in it. Two things have just happened that make this account more valuable for people over 65 than it has ever been in history.
One of which the government has done specifically for your age group, hell, and it barely got reported anywhere.
There is also something every widow and widower in this country should know about Hout.
Part 1. How perfectly ordinary pensioners ended up with HMRC letters they never expected. Part 1. How perfectly ordinary pensioners ended up with HMRC letters they never expected.
The personal allowance for the amount you can earn before income tax starts has been frozen at £12,570 since April 2021.
Year after year.
What that means in practice is rather brutal. For a great many pensioners, the state pension now swallows the entire personal allowance.
People who genuinely believe they would never deal with the tax office again are getting their tax codes changed, or a letter called a simple assessment telling them exactly what they owe.
Let me make that real. Picture a widow in her 70s, full state pension, a small works pension of £2,000 a year, and £40,000 in savings.
The state pension has used almost all of her personal allowance, so that £2,000 works pension is nearly entirely taxable.
She has never earned above the tax threshold in her life. Nobody explained that the threshold stopped moving while her pension kept rising.
The personal savings allowance. Basic rate taxpayer £1,000 a year, higher rate £500, additional rate nothing at all. It has not moved since 2016.
There is something you can do about which account your money is sitting in, because the tax treatment is decided entirely by the wrapper around it, and that is completely legitimate.
Part 2. The account. What it is, what it does, and why most people have never had it properly explained.
The account is a cash ISA, an individual savings account. And I know some of you just thought you know what an ISA is. Stay with me.
An ISA is not an investment. It is a wrapper, a protective box you put ordinary savings inside. As far as your tax bill is concerned, money inside an ISA simply does not exist. That is what I mean by HMRC can never touch it.
The comparison is stark. Two people each put £20,000 away at roughly the same rate. One uses an ordinary savings account and earns about
same money, same bank, completely different outcome, decided purely by which account the money went into. That is why I say your savings may simply be sitting in the wrong place right now. And here is the part that compounds beautifully. That protection does not expire. Money you put in this year stays sheltered next year and the year after tits forever.
One honest exception, Pen, because I would rather you did nothing than something unnecessary. There is a lesser-known rule called the starting rate for savings.
But the moment you have a works pension, or your savings grow, or interest rates rise again, that protection erodes. If you are 65 or over, that cut does not apply to you. You keep the full £20,000 cash ISA allowance. The government wrote that exemption in deliberately. Someone aged 64 will be limited to £12,000 a year of tax-free cash savings. Someone aged 65, £20,000.
And there is a second change stacked on top, announced at the same time, that makes all of this considerably more important. From April 2020...
Part 3. The advantage your age group has just been handed, and almost nobody noticed.
The government announced that the amount you can put into a cash ISA each year is being cut. From the 6th of April 2027, most savers will only be allowed 12.
Basic rate goes from 20 to 22%, higher rate from 40 to 42, additional rate from 45 to 47, already confirmed law.
So you are the one group the government has decided to leave the door fully open for. If you were ever going to move savings into an ISA, this is not a bad moment to be looking at it.
The allowance runs from the 6th of April to the 5th of April, and it does not roll over. If you do not use this year's, it is gone permanently.
If you are in a couple, both of you have £20,000 each. That is 40,000 sheltered in one move. Do it again next April, another 40,000.
And if your tax code has changed without you understanding why, that is almost certainly why. The fix is sitting on every...
And there is a second change stacked on top, announced at the same time, that makes all of this considerably more important. From April, a simple check tells you where you stand. Look at your last bank statement and work out roughly what interest you earned across all your accounts last year. Before you move anything paying, check whether your total non-savings income sits below £17,570.
Part 4. The one I most want widows and widowers to hear quisive, and share with anyone they know who has been widowed.
If you have been widowed and had no idea this existed, please look into it. Contact the providers that held your spouse's ISAs.
Your checklist. Find out which provider held the ISAs. Ask for the value at the date of death. Apply for the additional permitted subscription. Fill it.
One important clarification. Your ISA is tax-free while you are alive, but when you die, it forms part of your estate, and inheritance tax may apply.
Part 5. The single most important thing in this entire video. And people get it wrong constantly.
Here is what you must hear. Do not withdraw the money and pay it back in yourself. Ask for a transfer. That one sentence can be worth thousands of pounds.
Folks, if you have an existing ISA and withdraw the money to move it, that money has left the protective wrapper. Paying it back in counts as a...
Do it properly and none of that happens. Go to the new provider with the better rate, open the account, and fill in a transfer form telling them where the money currently is.
A few other practical points worth having. Rates on cash ISAs vary enormously between providers, and loyalty is punished. Old account
Jinshins. Ask whether an account is a flexible ISA. With a flexible ISA, if you take money out and put it back within the same tax year, you can split your 20,000 across different ISAs if you want. The allowance runs from the 6th of April to the 5th of April, and it does not roll over.
Before I finish, Pem, 3 things this account does not do, because I would rather you heard them from me. 1A, an ISA is not free from inheritance tax.
2. Money in an ISA still counts if you are claiming means-tested help. Pension credit looks at your savings, and savings in an ISA count.
So here is where that leaves you. The personal allowance is frozen, your state pension has all but filled it, your bank reports your interest automatically.
You have done nothing wrong to end up in this position. It happened through a frozen number and a rising pension. Nobody wrote to explain.
Your checklist. Check your savings interest against your allowance. Open or top up a cash ISA before the 5th of April. If in a couple, both.
Look after yourself, look after your family, and ring the bank.
Three things to know precisely. First, you get the allowance even if the ISA money was left to the children. It is the allowance you inherit, not the money itself.
When someone dies holding an ISA, their surviving spouse or civil partner is entitled to a one-off extra allowance, eateries. And here is the part people find most uncomfortable. Your bank tells HMRC. Every year, banks and building societies...
This is general information, not personal financial advice. Rules, rates, and allowances change, and everyone's circumstances are different.
If this video helped you understand where you stand, smash that subscribe button. We cover UK tax, savings, pensions, and retirement.
If you have lost a husband, wife, or civil partner, there is an entitlement here that a great many people never claim because nobody ever tells them it exists. Both of those are coming. But first, women, let me explain the trap you have been quietly walked into. Because none of this was your doing.